Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. I will tell you, just coming off Thatch Nguyen's live stream, a lot of fun, a little amped up. He's a pretty passionate young man. And I apologize for folks that listened. They got shocked by the cuss words. It was live. I couldn't do anything about it. Sorry about that. But one thing I thought we would talk about with the Avengers, the real estate Avengers, is syndication. If you turned into Thatch's number one topic with him is bigger is not better. That's where I started it. And he talked about a syndication he's a part of, and he led, right? 100-unit brand new build in Oakland, California. The basic end of the story is he needs to raise more capital. Rental rates came in lower than expected. Interest rates went up more than expected. He happened to be in a position where he and his partners could cut a check, but they will have to do a capital raise. And Thatch's opinion is stop overcomplicating and stop doing these things. So I want to go around the horn and ask you, are any of you a part of a syndication? I think I know the answer, but I don't want to assume. And if you are, why? And if you aren't, why not? And we'll just go left to right. Lumberjack, what's the deal? You in a syndication? If so, why or why not?
No, because I trust one person with my money.
This guy.
And I love you all like brothers.
But yeah,
but there's contracts involved, and I know you guys. And the other thing too is Millennium Mike and I were talking about this, and I was like, I do some stuff in another part of the country where somebody else was established and somebody else already had the footprint and had that stuff built out, but it's because we're like-minded. We're like-minded, we invest the same way, generally speaking, and the fundamentals are there. And the problem that you have with a lot of these syndications, I'm seeing stuff with 64% IRRs. Just stop. Stop.
Yeah.
The rule is if it's over 20%, it's likely a scam. Yeah. That's the general rule. So when I see 64% IRRs, I'm like, yeah. You're going to be asking for more money from me, and I'm not getting anything more for it in the next 12 months is my guess. Yeah. So yeah, for me, it's much more of I'm an active investor. You make a lot more money as an active investor than you do a passive investor. Even if you're an active passive investor, like Dion, you make, I got to smile, but you make a lot more as even an active passive investor than you do as a truly passive investor. Okay. And so you turn it into just purely an investment. I'm losing the same control in that than I am in a stock. I'm losing the same level of control. So for me, it's a hard pass. And I know some great syndicators. Anna Kelly is phenomenal. Phenomenal. If I ever considered syndication, she would be number one on my list.
Yeah,
but
I agree.
Outside of that, not interested.
Yeah. How about you, Dion? Syndications, you're an accredited investor. You're a lazy investor, right? So syndication seems like right up your alley.
There's two things with syndications. The first thing is that accredited investor thing. I agree with Matt. You give up as much control as you have with stock or crypto or something like that. But we heard somebody in Bigger Pockets explaining the accredited investor thing. And they actually said that this is the sentence that came out, and it's why I wouldn't look at them. We have to only invest with accredited investors because we're probably going to lose your money. And I wouldn't want it to be the $50,000 that mattered to the mom and pop who saved it up over the last 40 years. I want it to be the person who doesn't care if they lose $50,000. So the person putting together the syndication is required to go with people who understand the risks. That's the point of having accredited investors. The second thing is, I don't have a problem with them. I agree with the accredited investors thing. I look at it like crypto or stocks. I think you focus on one asset class, whether it's crypto, stocks, syndications, real estate, doesn't matter. Pick the one that excites you. You're more likely to stick to a plan you're emotionally invested in. You stay with it till you become super wealthy, more so than I am. And then you diversify 1 to 5% of your investments into something you don't understand, because you can risk it and you can lose it. Yeah. So myself, at some point, like you did, Mike, and I think Matt, you put 1 or 2, I think maybe 5% or something into crypto. You went and bought some crypto.
Yeah, I did.
Right. You could lose the money. You don't care.
Yeah.
That's how I'm looking at syndications. There might come a point where I go, there's $100,000 sitting over there. I'm not going to buy another rental. I might as well put it in a syndication. And if I lose it, I won't even feel it. But if it does well, I'll make a couple videos about it.
There you go. All right, Mike, you're an expensive market. You had the opportunity to do syndications or go out to another market. You chose out of state.
It-
Yeah. What do you think?
yeah, I think that syndications are a good way for people to feel like, oh yeah, I'm invested in real estate. I'm getting all the benefits of real estate, but you're not actually investing in real estate the way that we talk about. So on a technicality, yeah, you're correct, but you're missing out on a lot of the benefits that come from actually owning the property yourself and seeing the appreciation gain yourself under your name. And then you get access to the cash out refinance or the home equity line of credits or whatever it might be. And then of course, someone else may decide to sell that property. You don't want to sell it. Somebody else may keep it. And maybe you do want to sell it. Shoot, the market's up. I got concerns it's going to drop, even though I don't suggest timing the market. You as an individual lose out on the ability to make a lot of your own choices at the times that you feel are appropriate. So like Dion said, if you've already successfully invested, retired from financial freedom, and you're looking to diversify and you want to put a little bit of money with Anna Kelly, who, like Matt said, is my favorite person. And of all the real estate syndicators I've listened to, she's the only one I follow on Facebook. She's the only one that I genuinely like and like send her messages. To Dion's point, I know exactly who he's talking about from Bigger Pockets, who's like, oh yeah, we only deal with the accredited investors because, we don't want to lose Ma and Pa's 50,000 grand. I mean, of course he wasn't outright saying that he's intending to lose your money, but in the back of his mind, he is more okay with losing the rich guy's money than losing the poor person's money, which I guess is good. But how about you don't lose anybody's money, especially mine, if I'm investing it with you? So if somebody's going to lose my money, it's going to be me. No one's going to care more about it than me. So I have not done any. I have no plans to do any, but I'm not ruling it out forever.
Yeah. Kind of this, I love it. We're all on the same page. I've not done a syndication. I've been an accredited investor for 10 or 12 years. I've been pitched them for at least 10 years. Once you get on a list, you're on a list forever. I see them almost every day. For me, a syndication is very much like the stock market. And if you know my story, I did really, really well and then didn't. I got burned by two frauds, Enron and then WorldCom. Both were audited. Both were, Fortune 500. Both were the best of the best and rubber stamped by everybody on the planet. And they were frauds. I believe there's a lot of fraud in syndications. I don't know which ones, and I'm not going to figure it out. So I will not invest in any syndications. And, oh, by the way, I like having control, and I'm a control freak and, all those other things. But the biggest thing for me is I don't know, we're going to find out in the next 2 years. The tide is going out, and Warren Buffett told us somebody's swimming naked.
There's a lot more than somebody. There's a lot of buddies. I mean, I look at it, and there's already videos hitting now for people that are sharing their syndication letters where their returns are being cut.
Yeah.
There's 3 big guys that do syndications that have sent out letters saying we've cut this month's payment by 80% or 70%.
Yeah.
Won't say who those are, but at the end of the day, that's what freaks me out the most, is because what's the likelihood that next month it goes back to normal? That's going to be the trend for quite some time. And worst of all, they're likely going to have to reach back out and say, we actually have to do another capital raise.
Yeah.
And so we're going to need you to pay more in just to keep your initial investment whole. And to that other person who has no problem, that doesn't want to lose mom and pop's 50 grand, I get to have a Dion moment right now. And that is where you're not thinking about is the fact that a $50,000 investment from mom and pop, they can't afford a kneecapping lawyer.
Yeah.
An accredited investor can. And so enjoy living the rest of your life getting your ass sued if something goes sideways, because that's the cool thing about accredited investors. It's not just the fact that they've got the money. They've got a little bit of what I like to call FU money.
Yeah.
They are more than happy to go, I think I'm going to ruin that guy's day. And they don't need to do a class action. They can literally just go, we're going to tie this up ourselves and take care of this ourselves.
Yeah.
And so the concern that I have for that one individual is that the last person you want to piss off is an accredited investor, because they've got the chops. They make more than, what is it? I forget. Is the number 250 in a million?
I think it's $1 million in a net worth, excluding your home, 250K a year, single, 400K in a couple, I think are the rules.
Yeah. So with those numbers, that person can afford a pretty darn good attorney.
Probably several, very several.
Like
Dion, you were raising your hand?
Yeah, a really good takeaway I had from Thatch's interview with you today. Thanks for putting that together. It was really cool. But I mean, there was a bunch of good information, but this was the one that I liked about syndications. He said the sentence, "The bigger the name attached to the project, the less you're going to make."
I thought that was
And
awesome.
that resonated.
Yeah. The bigger the name, the less you, the LP, is going to make.
Hard pass.
Hard pass. Hard pass. Mike, any closing thoughts on this topic?
I think a lot of people are attracted to syndications because they think, and there are some out there who deal with non-accredited investors. Not all of them are accredited, but I think people think, okay, I can get into real estate with less money than it would cost for me to get into real estate the way that we talk about. And so it's attractive to them. Of course, one of the primary reasons people talk about syndicate or real estate in general is passive income. Well, nothing's more passive than a syndicated project you don't manage. So it's got all the same attraction features with a lower cost and barrier to entry. So they might get wrapped up in thinking it's a good deal for them. It might be, but probably you would be better served if you went the route that all of us have gone. At least that's my opinion. For yourself starting out, I think you should try to do the way that we explain in our videos.
Do the work. Do the work. Matt, closing thoughts?
I think that's right. I mean, again, for me, passive is passive. And a great investor always thinks about the exit strategy. A great business person always thinks about the exit strategy, right? Like you and I have done a bunch of startups, and the idea was always do this, then go public, do this, then get acquired, do this, then this is the exit, right? And then being able to pivot. You tell me what you do when the letter shows up on your doorstep where your syndication, where your payment was dropped by 80%. You let me know how you pivot. And if you don't have the answer to that question, you shouldn't be doing syndication.
Yeah, I mean, Thatch was a 10 o'clock live stream, went an hour and 8 minutes. Again, one of the takeaways I have is a lot of LPs have already lost their money. They don't know.
Agreed. I agree with that.
Yeah. Dion, bring us home, man.
So my closing thoughts, I will touch on what Matt and Mike did with the loss of control. You can wipe out millions in gains in the last few years from one deal now. That's another thing Thatch said.
Yeah, he did.
But for me, it comes down to that XY axis. That real estate XY, the more risk you're willing to take, the more money you'll make. The more work you're willing to do, the more money you're going to make. There is no work in a syndication. So it's at the bottom of the amount of work you're going to put in to make the most amount of money. There is significant risk without the reward. If you take that risk and you buy that single family house that you're going to do Airbnb with in an area where Airbnb might go away, you took a huge risk to make more money. With syndications, you have all of that risk without the upside. So again, like you guys have said, hard pass.
There you go. Well, guys, thank you very much. We will get your YouTube channels in video number 2. Thank you so much.
That was good.
Ciao.